Hello, this is Andrew Westhof, owner and senior loan officer of Homes Mortgage Lending, and this is your interest rate update for Friday, January 13th, 2023. So happy New Year. So we'll get right into the interest rates here in just a minute. I did want to make an announcement that Homes Mortgage Lending has dropped their margins significantly. So prior to the new year, our rates were always very competitive. You were going to have a hard time finding a lender in Michigan that was going to beat our rates. Now we're beating most lenders very handsomely. And I don't think you'll find another lender in the state of Michigan that has better rates. So always shop around, double check, but if you're looking for a lender that's going to provide great service as well as give you a fantastic rate on a conventional FHA or VA loan in the state of Michigan, please reach out. I'd be happy to assist. All my contact information is in the video description. And like and subscribe if you'd like to see additional interest rate update videos. And I also do some personal finance videos and mortgage news and videos as well. So let's take a look at the rates where we're at today. So on our standard scenario, we are at 5.823%. The standard scenario is a 30-year fixed conventional loan, assuming a $250,000 purchase price with 20% down, 740 or above credit score, 1 unit single family primary residence on a 30-day lock period. So that rate's 5.823% today, and the APR would be 5.982% with Homes Mortgage Lending costs. So let's take a look at how that actually breaks down in dollars and cents. So here's the rate, 5.823, 5.982% APR, $250,000 value, $50,000 down, makes it a $200,000 loan amount. And then these are the third-party costs as well as the money to set up an escrow account. So we are assuming an escrow account setup for this scenario for the out-of-pocket. And these are all estimates, but they're going to be pretty close on a purchase price in this price range in Michigan. The property taxes are probably going to be lower on most homes that you look at, but they're going to be assessed up to this amount or higher. So it's kind of a good ballpark for what the payment will ultimately be. So if you have any questions on that, please put them in the video notes or reach out to me. I'd be happy to give you more explanation for that. But just for our purposes, to keep the video not too long, we'll go through the actual numbers. So this would equate to a monthly payment of $1,176.44 for principal and interest. I have an estimate of $900 a year for homeowners insurance or hazard insurance, which is $75 a month, and property taxes at $6,000 a year or $500 a month. So the total payment is $1,751.44. And then we're looking at $62,976.23. So basically $63,000 out of pocket with 20% down plus closing costs. So to give you an idea, while you're shopping for a home, what that's going to look like as you are figuring out how much your payment might look like based on today's rates. That $1,176.44 is a $200,000 loan amount. So that equates to every $100,000 you borrow is about $588.22 today, or every $10,000 that you borrow is $58.83. That doesn't include mortgage insurance. So if you're doing a loan with less than 20% down, you have mortgage insurance. This is on a conventional loan, so different loan programs are going to have be priced out a little bit differently. When you start getting serious about a home purchase, you should definitely be talking with a lender so that they can go through numbers for your specific scenario. So to talk a little bit about what is happening in the market, at the end of the year, in the beginning, the end of last year and the beginning of this year, the rates were in a lot of flux, and I like to call it like the holiday hangover. So what happened, there wasn't really a rhyme or reason, but rates went up a lot. Really it kind of boils down to a lot of investors which push the rates. So investors who buy mortgage-backed securities on the secondary market, that's what the majority of mortgages are tied to. They were mostly on vacation, just like we were. And then when there's less investors in the market, every single trade that they make is a lot bigger of a deal to how it sways overall rates in the market. So a lot of it was just there wasn't a lot of traders doing a lot of volume. And oftentimes when we have a long period where there's not a lot of economic data and a lot of people are on vacation, really the end of the year is the big one. The rates tend to go up a little bit because all of the investors are hedging against something crazy happening while they're on vacation. They don't want to come back and go, oh, well, inflation went way up while we were gone and we didn't adjust, and everybody locked interest rates and we're losing our money. So that's kind of what happened in the short term. The good news is that shortly after the new year, rates started to slowly come down, and then they kind of ticked down a good amount this week. So to kind of they adjusted for kind of where we expected them to be. And then the news for the week, not much. The CPI inflation numbers came out yesterday. They came out right on track of where we expected them, with 0.1% decrease overall. So because that's kind of what was anticipated in the market, they didn't really move the market that much. Definitely not a bad thing though, because if inflation showed that the rate of inflation was increasing as opposed to decreasing, that would have really been a bad thing for mortgage rates. On the flip side of that coin, we still have a very strong labor market and very strong consumer spending. So both of those things are kind of pushing in the opposite direction. So we're at a little bit of a stalemate right now, which is causing volatility in mortgage rates, and we don't really know in the short term if rates are going to go up or down. Most experts predict that in the long term, we're still going to be coming down from here, but in the more near future, it's kind of anyone's guess. My best guess is that we're going to kind of stay where we are, high 5s, low 6s for that 30-year fixed conventional. So I hope this is helpful. If you do have any questions or need anything from me, please don't hesitate to leave comments in the video, or especially if you're thinking about a home purchase in Michigan and want to see what your numbers look like for your specific scenario, please reach out to me. Send me an email, give me a call, or shoot me a text, and we can set up a time so that we can discuss your specific situation. Thank you so much, and have a great weekend.